Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, June the 14th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we're talking about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, let's get this on. We had some market moving data today. We had a consumer price index. The CPI came in at negative 0.1%. Was expected to be a positive 0.2%, so lower than expected there, kind of rocking the markets a little bit, making people wonder whether or not the Fed is actually going to continue to raise rates today. It's supposed to be expected another quarter basis point move higher. It's right now at 1%. That would be a move to 1.25%. I'll talk about that here in a little bit more later on, but we also got the core CPI came in at 0.1%, was expected to be 0.2%. Retail sales also dropped dramatically to negative 0.3%, was expected to be an increase of 0.2%, and that was core retail sales. And then with retail sales came in at negative 0.3%, was expected to be negative 0.1%. We also got crude oil inventories came in at a drawdown of only 1.7 million barrels, was expected to be a drawdown of 2.3 million barrels. Then on to the rest of the numbers. We've got the FOMC meeting today. It was a 2-day meeting. Today they're going to actually release what they have on docket for their rate increase, if they do or not. Anyway, on to crude oil futures below that 61 fib level, came down and tested this value area low, bounced right off of it. You know, I've been talking about that acting as the support. That's where it has found support so far. So we'll have to see if it continues to want to go down and test this 78 fib level. So market could easily want to go down there now that we're below that 61 fib. Then on to gold, bit of a flight to safety today ahead of the meeting. Gold futures up by about $7. Found a nice bounce off of the 50-day moving average, and which just happens to coincide with the value area, the point of control where the most time and volume has been spent. Bounce off of that and now back below that 9-day moving average. So gold futures continuing to try and push higher, and with economic picture being a little bit fuzzy right now, that's probably the right direction. Bonds really bouncing higher. We're up 2 points just a minute ago, now just slightly under that. Bonds pushing higher based on the economic data that we got today. Fed fund futures are actually even taking out a bit of the percentage of probability of a rate hike as well. But bonds pushing higher, kind of fading the Fed at this point in time, trying to voice their opinion, if you will. And value area high being tested this morning on the Dow futures, still positive on the day. Positive on the day, but bouncing off of that value area high. That's going to act as resistance, albeit we did create a new historical high in the Dow. Then on to the NASDAQ. NASDAQ has been the one that really fell off when we saw this tech rotation just getting decimated. If you remember, I put on a lot of trades around that because volatility spiked in a lot of these tech sectors, which was good for premium selling strategies. So that has been working out. We've seen volatility come back off a little bit. E-mini S&Ps down on the day. Bit of a mixed bag heading into this FOMC meeting. A lot of people covering a lot of trades, as I have as well, trying to get a little bit more delta neutral. I am almost dead on delta neutral now. I was really long for a while there, but I've taken a lot off. One could say this is basically an inside day where the value area is lining up. But consolidation happening ahead of this meeting. Nobody really wants to put on a lot of positions heading into this, especially after the economic data that we got today. Had that economic data been really good, then the rate hike would have been a for sure thing. But as we can look at the Fed Fund Futures August. So this August contract is pricing in probabilities of the next two meetings. So with the Fed Fund Futures in August, it's a clean month. We can look at this and say that, when it was trading 85, that was about a 60% probability of a 25-point rate hike within one of the next two meetings, June and July. We have two meetings coming up before this contract. So this can pretty accurately tell us what the probabilities are. So when it's trading 85, that's about a 60% probability. When it traded up to 87, that dropped those probabilities down to almost 50% probability of a 25-point rate hike in one of the next two meetings. So if they go in June, they wouldn't be priced in for the July, but if they don't go in June, this August market is pricing in a 25 base point hike in July or June. So, but it's a 50-50 on even at all of a rate hike coming in those next two meetings right now. So Fed Fund Futures could get a little crazy going on in through this meeting, and then it'll be open for another hour after that meeting has been over and they've released the statement. So on to a few things that I've done. XLK, if the Fed doesn't hike, and since it's a 50-50 probability, I've decided to take my profits in XLK, which I just put on a couple of days ago. And if you remember, I did the July, sold the 53 puts for 58 cents and was able to buy that back today for 27 cents. So 50% of my profit there. As you can see, we got a lot of volatility crush happening after I put that trade on. Also got the directionality, so that helped out. But if the Fed doesn't raise rates, the financial sector could easily get hurt. So I thought this is the technology sector. Sorry, but anyway, that I thought I had on took off a trade for the financial sector. Sorry, XLK is the technology sector. Excuse me for that. Talked myself into that, I guess. But XLK has that fall off with the tech sector that we talked about. They got implied volatility. Now the tech sector is rebounding. XLK came back and was able to buy that back for, like I said, 27 cents. Sorry about the confusion there. Confused myself as well. XOP directly correlated to the oil and gas. This is the production side, with oil and gas coming off, or crude oil coming off dramatically today with that less than expected drawdown. XOP is going to continue to get hurt. It was up nicely yesterday, but decided to pull the ripcord on this trade today. With XOP, if you remember, I had on the June 30 puts in there that I had sold for the June 30 puts I had originally sold for 56 cents, bought them back today for 47. So not a huge winner there, but with the market coming back off like it has, I just decided to pull the ripcord on that. Could have probably covered it close to 50% of my max profit yesterday, but held on to it one more day, thinking that I could get a little bit of a move higher in there. Now with Apple, if you remember, I had on the synthetic long, got beat up on it, decided to pull the ripcord a few days ago, but I left on, since I had the synthetic long, it wasn't really working for me. I had sold the 160 calls to cover that trade, and then rolled it up and out to the 165 calls, collected a little bit more premium for those. Originally sold those 165 calls for 74 cents, bought them back for 12. And remember, when I pulled out of that synthetic long, I just decided to take advantage of some high implied volatility that the tech sector had seen, and I had gone in and sold the 135 puts in there. So with that Apple, selling those July 135 puts, I originally sold those for $1.41 and bought them back for 66 cents. So nice little profit there. Basically, no directional move necessarily, but that volatility crush is what got me to that profitability, which is what we love to sell options for that very reason. So anytime you can get that pullback and volatility like we're seeing across the board, Qs directly correlated to the tech sector being the NASDAQ, and the Qs also. I had originally done the July, sold the July 131 puts in there for $1.13 and bought them back for 58 cents. So basically all of those were put strategies that I had put on to take advantage of the high implied volatility after that massive pullback in the tech sector. Got a bit of a bounce in there and was able to take advantage of all crushes, which I talked about so much, and haven't had the opportunity to sell. So a little bit giddy that we've had the opportunity to get a little bit of high volatility, despite the fact it didn't last very long. It's the time to take it. When there's blood in the water, that's the time to go fishing. So all of that being said, that's about all I've done today. Waiting for the FOMC, and now I've pretty much gotten close to delta neutral in my portfolio. Slightly long, but for all intents and purposes, it's delta neutral. All right, that's all I got for you guys today. Friday's webinar is going to be on the Azo logo. So it is the crazy bears in a sense, but because it is a double bear spread, we're going to be buying a put spread and selling a call spread to finance that. That's going to set up somewhat similar to what these other strategies we've been looking at. So check it out, protraderstrategies.com. That's all I got for you guys today. If you can't take that, take it easy.